Fighting Homelessness by Bonnie Dixon. According to Zillow Home Value Index, the average cost of a home in Washington state is approximately $606,000. Even though there's no change since last year, it's a significant difference between the nation's average, about $369,000. Rural locations such as West Virginia, Arkansas, Iowa, and Alabama are the lowest in the nation, but even those locations can make the American dream of home ownership unachievable. A recent study by the Joint Center for Housing Studies of Harvard University found that some home prices were up 60% over 2019 prices. This is a shocking 5 times the median household income and significantly above the price to income ratio of 3 that has traditionally been considered affordable, according to the study. Many builders combated those prices by producing homes that were smaller or had fewer amenities. The median size of a home declined again last year to 2,150 square feet. For perspective, the average new home in 2021 was 2,532 square feet, but was only 909 square feet in 1949. Despite shrinking home sizes, mortgage rate buydowns, and other incentives, mortgage rates have priced less affluent households out of the market. The national average monthly mortgage payment rose to $2,570 for a 30-year mortgage for a typical first-time home buyer in 2025, well above the $1,445 of just 3 years prior. To afford a payment that steep, a buyer would need an annual income of about $127,000. Only 6 million of the 46 million American renters fall into that category. In addition, the down payment for home ownership has increased to $26,800, making home ownership a prize that requires contributions from families and friends if achievable at all. High housing prices contribute to higher rental rates. As people find they cannot have access to purchasing their own homes, they are also finding that they then must rent. Last year, nearly 1 million more households became renters over the year before, a number that vastly outpaced the number of new multifamily units by nearly 400,000. In 2004, the home ownership rate in the U.S. was 69.2%. In the past 2 decades, it has fallen to 65%. Meanwhile, the stock of units renting for less than $1,000 per month fell by 30% from 2013 to 2023. The outlook for the industry does not indicate that rental or purchase rates for housing will go down in the near term. For one thing, much of housing materials will be affected by new tariffs. Home builders estimate that the newly imposed tariffs on construction materials will increase new home prices by $10,900 apiece, according to an April 2025 survey by the National Association of Home Builders. And the number of new housing units created last year was a one-off. There's no expectation that the housing industry will continue to grow the number of units by a similar amount over the near term. In 2023, 34% of older households, homes headed by someone 65 and over, were cost burdened, meaning they paid more than a third of their household income for housing. More than half of those individuals paid more than 50% of their household income for housing. Both renters and owners struggled. Nearly 60% of older renters were burdened in 2023, and 43% of older owners with a mortgage are cost burdened. This isn't an insignificant number of people. In 2022, 31% of owners in their 80s or over still held a mortgage. However, even older adults who own their homes outright are seeing such steep increases in insurance, especially in those areas with the greatest risk of natural disasters, that they are experiencing housing challenges. The number of billion-dollar disasters has increased exponentially. As homeowners reach 80 and over, the number of single-person households increases. These individuals also see a lower median income and higher housing costs due to the need for in-home services and accessibility modifications. The number of those householders 80 and over is projected to double in the next 2 decades. Existing shortfalls in aid and proposed federal cuts to rental assistance, Medicaid, and nutrition will especially target older Americans. According to the Joint Center for Housing Studies, those 50 and over already represent the fastest growing population of unhoused people in the U.S. While shoring up existing systems would help, the U.S. continues to need suitable, affordable, and accessible housing options. To address issues such as housing density, many states, including Washington State, have passed housing policies, starting with zoning. In 2023, Washington HB 1110 revealed a plan to create 1 million new homes by 2044. Currently, the most common types of housing built in Washington are the multifamily building, apartment complexes, for instance, or the detached single-family home. California and Oregon passed laws to end single-family zoning in most cities. They looked at Houston's successes because that city has reduced homelessness by more than half in the past decade. Vermont, Montana, Colorado, and New York are also looking at similar moves. The focus on HB 1110 for Washington is to create middle housing. Middle housing includes things like duplexes, triplexes, townhouses, cottage housing, www.microlifeinstitute.org, and the like. Middle housing essentially tries to mimic single-family housing characteristics such as yards, porches, driveways, and the like, while housing more families more affordably. Spokane focused on following on Spokane focused on allowing fourplexes on all residential lots in 2022, and there has already been an additional 400 new housing units added. Their pilot program allowed for more housing options to be approved and built without the need for special permits, variance, or discretionary review. States considered middle housing options are trying to return to more flexible zoning options. Other cities, states, and organizations have considered whether the public sector can return to leading roles in developing, owning, and managing housing to build institutionalized capacity. A private sector option is also available because the public sector option simply isn't substantial enough to meet the needs. One option is a mixed income trust, mint-trust neighborhoods. This model uses private capital while still maintaining community control by developing, owning, and operating a rental housing and retail portfolio. Communities control the formation process, and the Mint provides a tool for a non-standard affordable housing option and provides more flexible finance options. There's a nationwide movement that assists manufactured home residents in converting their properties to cooperative ownership called Roku SA, ROCUSA.org/policy and advocacy /. Many manufactured homeowners don't own the land under their homes. That means that the owners of the land control the land, site fees, and the making of park rules. Homeowners are likely to see rent increases when the land under their homes is sold. When manufactured homeowners own the land, they choose infrastructure improvements, make their own rules, enjoy a stable monthly site fee. The result for the homeowners is security from unfair evictions, but also a voice in how the community is run. Housing, especially affordable housing, is a complex problem. All people should have access to safe, stable housing so they can live, grow, and age in communities that serve their needs. Homelessness is not a new problem, but with a record high 771,480 people experiencing homelessness on a single night in January of 2024 in the US, it is a catastrophe on an epic scale. We must do better.